Welcome back, ladies and gentlemen. Let's talk about Dkng DraftKings. This is a bear market buy. I did ask ChatGPT what it thinks of Dkng. We'll go over what he or she had to say. I don't know if it's a he or a she. It's an AI as far as I'm concerned. But we're going to go over how I pick stocks, especially when I'm looking to buy them nice and cheap, which would mean you would have to wait for a bear market because that's when stocks get real cheap. And we love buying good companies at cheap prices. Let me pull up the DKNG chart here on Street Smart Edge. Oops, that is not. Okay, guys, don't look at the password. Look away. And we should be logged in. Oh, no, that was wrong. But as I was saying, I think DKNG is a bear market buy. I think this is the one stock that the next bear market, which there will be one, the stock market goes in cycles. You want to buy the dip and accumulate this one because of the revenues. Let's look at the revenues. So this is how I pick stocks. I go to macrotrends.net. I look up whatever specific ticker I'm looking for, and I go to revenue and profit. And then I scroll down and I look at the charts here. And as you can see, as of 2019 and up until 2024, this company has been growing. This is the kind of chart you want to see. This is the kind of data you want to see, where it just keeps going up, keeps going up, keeps going up. And as an example, so yeah, it keeps growing. The company is growing. Its revenues keep increasing over the long term. And that is the kind of stuff I like to see. For example, BBAI here, you'll notice it's kind of all over the place, right? It just goes up and down, up and down. It's kind of going flat. Its revenues are flat. It's not really growing, but it's not really going down. So that's an example of a company that I would look at and go, yeah, I'm not interested in that. I'm interested in a company that makes money. I don't want to invest in my friend's hot dog stand if its revenues are going flat, if they're not really making more money every year, every quarter. I want to see that as a potential investor. So if my friend has a hot dog stand that keeps making money every year, every quarter, it just keeps making more and more money, and it goes from making 0.615 billion to now a high of 3.666, ooh, scary number, 3.6666 billion, I'm interested in investing. Sure, I could have invested when it was cheaper, but the fact that it has these kinds of results over the long term means this is the kind of stock you want to buy and accumulate when it's as cheap as possible. It's a good company and you want to buy it at cheap prices. So that's the first thing I look at, revenues. After that, I go to TradingView Financials and I look at the balance sheet. I look at the total assets to liabilities. I want to see that they don't have so much liabilities that they have way more of it than assets. That's really the only thing I look for. And as you can see, 4 billion, 4 billion, 3.74 billion, 3.61 billion, 3.86 billion, 3.94 billion, 3.8 billion. Their total assets as well as their total liabilities have been going sideways. They've been going flat for 2 years now, it seems, which is fine. I'm okay with that. Ideally, I would like to see their assets grow and their liabilities, stay as low as possible. But flat, that's fine. I'm okay with that. Now, if this had way more liabilities than assets, then that would be a problem. That would be a red flag for me, and I probably would just not touch it. And let me just show you another stock here as an example. Let me see if I can pull up. There's another stock. I believe it's called. I forgot the name of it. What is it? I think it's called. It's another gambling stock. Is it Bets? No, it wasn't Bets. It was GMBL, I believe. Oh, I guess I typed it in wrong. Okay, there's GMBL. So as an example, I do not want to look at the charts, but GMBL Trading View. So that's all you got to type in, just ticker name and Trading View Financials. And you can pull up its income statement. Well, I guess they don't have one. I don't know why it's not. Yeah, I guess they don't. I guess it disappeared off the face of the earth. Okay. Maybe it doesn't exist anymore. Maybe it died because it was such a bad stock, anyways. But unfortunately, I won't be able to show you a comparison here. But the net debt, you'll notice the net debt is positive $139.50 million as of Q1 2024. So for those of you who don't know, net debt is what I look at because it represents the amount of debt that would remain after a company had paid off as much debt as possible with its liquid assets. That's why it's important for it to have more assets than liabilities as well, because they also have to pay off debt. Now, most companies tend to have debt, and this one, on the other hand, it has more than enough to pay off its net debt and then some. So far on the balance sheet, looking good in terms of net debt, assets, and liabilities. But really, the assets to liabilities is what I look at. And the total revenues, we already saw that. It keeps growing over the long term. So the next thing that I look at is cost of goods sold. I do not like buying a company that sells a hot dog for $1, but it costs them $1.25 to make that hot dog. So you're losing money every hot dog you sell. You're losing 25 cents. So that's not going to be a profitable company if over the long term that continues. That trend has to change. You cannot have sure, maybe in the beginning you run a company and you sell things at a loss, because maybe in the longer term it'll be worth, those new customers that you get and getting people through the doors. But if it doesn't work out, that's a losing business. So ultimately, I would rather not invest in something like that. I'd rather invest in something that has, ideally, its cost of goods sold should be less than 75% of whatever its total revenue is. So in this case, its total revenue, 500 million here as of Q3 2022. Cost of goods sold, negative 372.69. So that's good. That's a good number. If this was negative 600 million, then I wouldn't want to touch this stock, because that's already, you cannot have a company. And I would not want to invest in a company that no matter how much revenue they make, their cost of goods sold is so high that it just completely, it's never going to be profitable, because we're not even including the operating expenses. So always, that's something I look for. I don't know how, maybe you guys do different, I don't know what you guys look at. I don't know what numbers you guys look at, but this is how I do my due diligence. I look at cost of goods sold and I'm like, okay, is this number less than the number up here? Okay, good. This is a good company. Even here, 855 million in total revenue, 485 million in cost of goods sold. So far, the cost of goods sold has always been less than the total revenue, and that's a company that I like. And then finally, the operating expenses are important to keep an eye on, because that cannot be too much. If it's too much, it eats into the revenue. And you can't have a business where your cost of goods sold is $1.25 and you're selling a hot dog for $1, but also your operating expenses are like another dollar. So you're actually not just losing the 25 cents per dog sold, you're losing you're losing more than that, because that's not including the operating expenses. So with operating expenses, their operating expenses have been going flat. That's interesting to note here. Let me see if I can pull that up here on macro trends. Where are operating income? No, that's not what I'm looking for. No, that's not it. Shares outstanding. What is their share structure like? Okay, they don't. Is that? Where is it? Okay, 463 million. All right, that's not bad at all. They have a good share structure. But I don't really look at share structure. It's rare that I look at it. But it does have 463 million in shares outstanding. So yeah, that's not concerning. It's not in the billions. And the other thing I do look at, again, the operating expenses, they cannot be too high. You cannot have operating expenses that are more than what you make. And as you can see here very clearly, Q3 2022, they had a total revenue of 501.94 million in total revenue, but their operating expenses negative 584, which is like you're running a company where it costs more. It costs so much to make. It costs so much to run the company that you actually end up in the negative because of the operating expenses. And you combine that with the cost of goods sold, and you're losing a lot of money. At least in this quarter, at least Q3. Now, if we look in the future here at Q1 2024, we had 1.17 billion in total revenue, cost of goods sold 710 million, operating expenses 703 million. So when you combine the cost of goods sold with the operating expenses, you'll notice that it's about 1.3 billion, and that's pretty bad because their total revenue is 1.17 billion. And if this trend continues, well, if they're not bringing down their operating expenses and trying to keep their cost of goods sold as low as possible, uh, it's going to be a while before they become profitable. I don't think they're profitable just yet. I'm pretty sure, yeah, their net income, they have not been profitable. As you can see, that's what I look at next is the net income. You can see negative, negative, negative. They have not had a profitable quarter. I think they're on their way there, but they really do need to tackle uh, the operating expenses more than anything. And maybe if they can tackle the cost of goods sold as well. So those are the two numbers that so just off of all of these numbers, I would say it's a buy, but just keep an eye on the cost of goods sold and the operating expenses moving forward. So next quarter, keep an eye on these numbers. You want to see them go down, ideally. You just can't have a company never being profitable because it keeps growing its revenues, but its cost of goods sold and operating expenses are just so much that it's just never profitable. And we like profitable companies. Like I said, I like a hot dog stand that sells their dogs at 150 and it cost them 150 to make it, but that's not a profitable company either because that's not taking into account the operating expenses. So what you really want, I was tricking you. I was just tricking you. What you really want is a hot dog stand that sells its dogs for $2 and it takes into account the operating expenses and it ends up with like a 10-cent profit per dog. And at least that way you are profitable per dog sold because it's taking into account not just the cost of goods sold but also the operating expenses. Hopefully that wasn't too wordy, but this is what I look at. This is how I think, and this is how I perceive at least the financials. And so far, it's worked out because don't, I don't, I don't pick garbage stocks because they have to meet a certain criteria, and that criteria is you better be a company that's growing its revenues quarter over quarter and year over year. Your cost of goods sold should be less than your total revenue, and your operating expenses should not be more than the total revenue. But if it is, I'll keep an eye on the number. I'll keep an eye on it to see if it starts coming down. But because it's not profitable yet, this is the kind of stock that I would buy in a bear market, and that's why I'm giving it the bear market buy signal. I don't know what to call it. The bear. If I'm an analyst, let's pretend I'm an analyst, a real one. Okay, I'm a stock market analyst. Let me just give you my rating. It's a buy and hold in a bear market. And the reason I say that is because the last time we were in a bear market, this stock came down. It came down as low as 11.20. It actually bottomed out down here, and it gave you so many opportunities in this bear market. This previous bear market, it gave you so many opportunities to buy nice and cheap. So that is where I would look to buy. And as of right now, it recently hit a high of $50. So the next bear market, even if you buy it, let's just say $25, you have an opportunity to take advantage of a 100% gain in the next cycle because the market does go in cycles, guys. So that is my opinion. I could be wrong. I will alert when I start accumulating DKNG once it bottoms out in the next bear market cycle. That is it for the video. Hopefully you learned something from this. This is how I pick stocks. I don't really go off of, oh, I'm just going to throw money at something and hope for the best. I'm more of a, let's look at the financials, let's look at the technicals, and let's combine all that data, all the information, and make a decision based on that. I would not want to accumulate up here. I would wait for a bear market, and that is it. And we'll know. You'll know when we're in a bear market. When you start seeing drops like this, that's when you know, like, oh yeah, this is a bear market. You can't miss it when you go into a bear market. The bear market will be obvious because you'll see Bitcoin, you'll see SPY, you'll see everything just dropping like a hotcake, and it'll happen again. So don't worry, there will be opportunities out there, and I'll see you guys in the next one.